All right, welcome back for another episode of Carnivore Trades. Today is Friday, February 17th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here today. So basically, spiders are down about 0.5% here. You see 39 basis points there. Q's down almost 1% though, on the other hand. So a little bit of a dip here. The Dow and the Russell are now green. It is Opex Friday. One of the things I tweeted out this morning and mentioned to members in our community is that, look, the volume's not that heavy here, even on this dump here this morning. Let's take a look at the spiders daily. Yeah, 63 million shares. We'll probably get a surge into the close in volume. That's very typical right before the end of Opex, as they want to keep those popular strike prices, away, the price away from those straight prices. But for overall, we had a nice little dump in the morning, which is typical after you sell off sharply like that. Usually you get kind of a gap down, some continuation here, and we're basically recovering. But this, to me, this is all just theta burn, right? So take a look at where we opened, where we are right now. Basically, we're looking at a daily doji candle, daily kind of we're opening right basically where we closed. A lot of sideways action. A lot of charts on my screen right now are sideways. Some of them are, like take a look at, the transports, for instance. So they gapped this thing down, they pushed it down, and it's just gone straight, and basically in a straight line sideways all day long here. XLE, same thing. I think NVIDIA, they pushed it down. It's basically back to where the opening range was. Look at Google. So a lot of these are just pins here, if you ask me. So they're just pinning this to right around 94 bucks. So again, let's not make too much out of this action here. The bottom line is what we talked about yesterday, 405, that's holding. And we did break the 20 MA. So that is somewhat significant. It's just a daily chart level, but we're holding 405. So I guess that's your positive here. It does look like the SPX here is a little bit farther away from that 20 MA. So that is going to be a daily 20 MA break, but you still have this bullish structure kind of in place on the spiders. So again, we'll give the market the benefit of the doubt. We'll give it the upside bias until that breaks, though. If we break this level, we'll get, 400 is so close right now. That would be an afterthought. Really, the big support is right around 395 for this kind of up move. Even if we just take a fib here, you can see there's your 50% fib at 396.68. And then you have the green bar there, 50 MA, 200 MA. So right in this zone here is pretty good daily chart support for the spiders. And even though we broke this 20 moving average, on the weekly, you still have a pretty decent setup here. So it's not terrible here. But again, like I've been saying, we are into the risk period now that Opex is over with. There's no reason for any more manipulation here as far as keeping the market sideways for Opex week. So we'll see what the real move is next week. Again, I wouldn't rule out another bid here in the market, but we're definitely on borrowed time. We're definitely in the risk period. And one of the things I want to talk about here is right now, so obviously we're seeing squeezes in a lot of names. Just look at, we've talked about them, but the Kathy Wood type names. Look at DoorDash. Nice reversal on DoorDash, by the way. But Bitcoin here, that one's continuing to squeeze up a little bit. Had a nice topping tail yesterday, but that is recovered nicely. Bitcoin, Coinbase, Roku, the Carvanas of the world. We've had those big squeezes in those names. And we're seeing buying in some other names as well. But right now, it's not just a short squeeze. From what my contacts are saying, my industry contacts, a lot of it is also panic buying, like actual buying. And basically, there's a lot of funds out there that were in cash, especially around and before 2020, that were too scared to buy the crash. And they missed out on the entire bull run in 2021. And now they're thinking okay, the lows are in, and every little dip, they're panic buying. And if you take a look at really the price action over the last week, you can see that. Look at the gap down, panic buying, gap down, buying the dip, gap down, buying the dip, gap down. They tried to buy it this morning here. It's Opex, so it's a little bit different. But you're seeing that in the charts, and why that's so dangerous is when we have the next leg down, like usually when there's a lot of shorts, so the shorts are getting killed out of this market right now in a lot of names. So there's not a lot of shorts, and there's a lot of longs that are like basically buying the top. Like they were too scared to buy back here. They were too scared to buy back here. Everybody said bear flag. Now they're buying. So that's it's that's the just the way markets work though. But the problem is when we go down, there's not going to be shorts to cover. So it's just going to cascade further when you get actual sellers coming in, and now, this won't happen until probably mid the way down. But that is something I'm noticing here. So it's not just short covering. We are seeing actual funds that were on the sidelines that missed the entire bull market. They're panicking right now because they don't want to miss. They're getting FOMO. And that's something that's going on here. So just something I'm seeing there. I wanted to talk about that. But again, it's Opex Friday. Market's holding on here. Nothing really too much to make out of it. We're below that 20 moving average. Yes, we did ding through that pivot, but it's holding up here on the weekly, and that's really the bigger time frame, obviously. Triple Qs here, though, again, not good here. So we tried to break out, and then we closed below yesterday's low yesterday. And yes, we are bouncing and holding the 20 moving average, but that is a little bit of a fake out there. I don't know here. We could get a bid up, but they should have been able to follow through yesterday, and they didn't. So that's a little bit of a concern here. But Triple Q's still technically holding up okay. On the weekly, again, you still have an inside bar there. It's hanging in there for now. But again, this whole market is on borrowed time. So just be aware of that. Russell 2000 here. Still have that daily inside bar. Russell actually was the first to go green this morning, if I'm not mistaken. Yeah, that went green before the Dow. So Russell's still holding up okay. Never quite got to that 195 area. It's basically just riding this 20 moving average here. I think the Russell is already topped. I think any bid here will result in a lower high. Again, you do have a gap fill up at 197. But that's about all I'm seeing. Maybe 197.50 if we pop up. I'm not sure here, but again, we're into a very, very critical risk period here that I have penciled in. So again, Russell 2000 is holding up for now. We'll respect it for the time being. Dow here, a little bit of a gap down like everything else, and then just right into this lower trend line. So we mentioned that yesterday. Got rid of that upper one. I don't really like it anymore. But it's hanging in there. Again, 345 could be a possible target for next week. Then I think the Dow is about done there. Again, that's a lot of supply in that candle. Lots of supply up here, lots of supply up there. So not a whole lot of upside here for the diamond. All right, over to semis SMH, continuing to show weakness here. So daily lower low in place. It's still holding that pivot though, but you are below that 20 moving average. So semis continuing to show laggardship. Take a look here. Qs higher low, semis lower low. So a little bit of weakness there. Again, that's 3 days in a row now. The semis are underperforming. That's now a pattern. So let's be aware of that and be on guard. That doesn't mean the pattern's broken. I mean, you're still holding kind of this 240 area, right? You're still holding the green bar. It's nothing terrible here, but I think the semis will be a short. If not next week, then in the next couple of weeks on any sort of push up here. But semis holding up for now. Remember, NVIDIA earnings Wednesday, so that could get a bid. I don't know what it's going to do on earnings. It's really anybody's guess. It's a crapshoot, but that is that's definitely going to be a focal point for next week. All right, over to cloud. So cloud on the weaker side here. This is another one of those that gapped down and just got pinned all day long. So cloud down 1.37% currently. And again, same thing. You broke this pivot here, so it's leading tech to the downside at least a little bit. But again, nothing terrible, nothing broken on the charts, especially on the weekly. You did have quite a bit of a tail there 2 weeks ago, and we do have 3 tails now on the IGV there. It's not the best tail here, but possibly a little bit of supply coming into play here. But again, we'll give it the upside bias for now until proven otherwise. But yeah, cloud lower. Just like pretty much everything today. Transports, we already touched down a little bit. So basically down 0.5%, went down, and it's basically been sideways all day. We still have a little red bar, inside bar there on the daily, but the trend is up, so we'll respect it for now. Again, could it get back up here and retest 15.5, 15.7? It's certainly possible, but I don't see much more here out of the transports right now. Onto interest rates. So interest rates finally getting a bid here. Finally, 2-year though, not a great pattern, right? So it's green on the day, but you gotta. I mean, this is starting to look like another daily inside bar. Down move. You're just inside of that candle. Not a really a great look. You want to see a V shape when it hits support, and we hit support earlier this week, and we have not gotten a bounce off it. So weakness there in the 2-year. That's not good for the market. 10-year is getting a bid. Remember, we talked about you're going into this green bar, you're going into these pivots, so that's getting defended here. I'm expecting lower highs in bonds, and the ZB is probably the best chart of them right now for like a good setup here. So we're holding this pivot. Finally, it's getting a bid here. You do have a bit of a rising wedge intraday though, so you can see that right there. So that might falter next Tuesday. Remember, the markets are closed on Monday, but either way, I'm expecting a lower high somewhere in these moving averages here. And like I talked about this yesterday, but we might get, at least at this point, I'm projecting we'll probably get an MA. So here's your M and then A, and that's usually a reversal pattern that would take you down to about 121. So right into this, right about there. That's where I've got good support there on the bigger time frame. But bonds still not looking good. And again, that's not a good thing. Another thing we haven't talked about, I tweeted this last night. HYG, I haven't talked about it in a while. It's defending. They're getting this trend line defended here for now, but this is a weekly bear flag. And on the monthly, that's a brutal inside bar on the monthly. So bond land not looking too hot right now. I think rates are going to go higher. And HYG is a pretty good example of that there, as well as the rest of the bond charts that showed you. But that is a concern here. Again, we could come in and put a lower high up at 75.50, but that's not looking too great. Maybe 76, but this is not a good chart here. Anyway, slice it or dice it. All right. Okay. Over to XHB. Again, nothing really too new to add. You pierced the 20 moving average. We did make a lower low. Again, it's holding the 20 MA for now, so we'll respect it. You guys know I think these have topped. ITB doing a lot more damage, so that looks like it's going to close below the 20 moving average. Remember, this has some, this has like Home Depot in it and so on and so forth. So a little bit more retail based, but still ITB a little bit more damage there. You're holding that breakout bar for now, but this, I think, was a blow off top. We could come in, put in a lower high, but that's about it that I see from the home builders. And VNQ continues to be weak here. Lower lows, lower highs. Not liking that chart at the moment. XLF, that wedge continues to get tighter here. Let's see. Looks like I thought they were going to try and save this 20 MA by the end of the day. Now we're flat here. Yeah, so it's going to be close here. So that 20 MA is 36.44. We only got 15 minutes left, so they got to pump it 8 cents in the next 10, 15 minutes. And they can do it. The last candle hit there, so maybe that's getting rejected right now. Interesting there on XLF. But yeah, you have that rising wedge. We just wicked below it this morning, and it's getting a bounce, but I think this is probably about done. Again, can't rule out one more last little gasp, but this looks beyond tired here. I do not like the rising wedge, and I think the fins are going to be they're going to be the canary here in the coal mine, as they were in December. So again, XLF on the weaker side. XBD finally showing some weakness here. Engulfing reversal there on the XBD. We talked about this. A lot of the time you get a break above those rising wedge patterns. And this is already way overbought anyway. And pretty good reversal there today. It's holding the 500 handle. So we're right in that area. But again, inside bar there on the 10-minute. So pretty good reversal there for XBD. This does look very tired to me as well. I know I've talked about Morgan Stanley last couple of days. That's still holding trend right now. So we'll give that one the benefit of the doubt. They probably want to pin that. It looks like they're just keeping it below 100. I mean, that would make sense, right? Look at where it went, 102 pennies. So that's, you think that's Opex games? Of course it is. Even number like that for sure. But yeah, Morgan Stanley also looking tired as well. You did get a break of that rising wedge here too, but it's holding the 20 MA. All right, crude. So crude took a little bit of a dump today, and it did not recover. Well, it came off the lows a little bit. We'll say that, but let's extend this trend line here. Yeah, so that is now, so we talked about this bull flag yesterday. At least I know I talked about members. Can't remember if I said it in here, but that has failed. So we don't even care about that anymore. I was just watching that, not saying it's a buy, but was watching it. That has failed. Crude just looks weak here. You can make a case you even have a head and shoulders. It's not like the best looking pattern there. I mean, I prefer head and shoulders when it's at a high rather than like at a low. It's not really a continuation pattern to me. It's more of a reversal. But, you know, crude's weak here. Again, 82.72 on a weekly close. You still have a weekly bear flag. This can go lower, lower than you think. But for right now, it's hanging in there. We'll just be neutral on it. We're not going to do anything with it at the moment. Anyways, XLE, nice outside move down. So 3.6% dump there. Could just be Opex games. We'll see though. On the weekly here, you did have an engulfing reversal, and this inside bar, this has held up for a long time. And we even tried to break above it a few weeks ago, got rejected. I documented that in here in these videos, like every day I was talking about it. So that is still holding up. I still favor a correction in energy, but it's going to be a dip buy, or a correction to buy, if you ask me. But XLE under pressure here. Maybe some of it is Opex games, but again, that weekly inside bar is holding up well. XOP, big outside move there. So that daily inside bar is now negated. Heavy volume on that too, so that may be starting to come in as well. And OIH, outside move there. In addition, it's touching that 50 MA, but you still have a weekly inside bar here. If we lose this, so I know I've been saying 350. If we lose this though, that's probably going to go back to 280 pretty quickly. So 308.31, we're not going to break it today, but next week, if that fails, that's 280, and then we could get back to that 280 or 250 original target that we had on this. So, but for right now, we're not going to, anoint anything just yet. But it is, nice dump there today, down 4.6. Nat gas, talked about a possible rollover in this yesterday. That has happened. It did come off the lows a little bit. I do have a measured move that it just hit today. So I'm interested to see how this trades out next week. I can tell you my inbox is like really, really full right now with questions about nat gas. The last time that happened on nat gas, the last two times that happened was when I was long Tesla right down here. And the other time was when I was short nat gas right up here. So definitely some contrarian indicators possibly coming in here. It did fill a measured move target that I have for it. And you did go into a weekly inside bar. Needless to say, it's ridiculously oversold. And I've showed you guys the seasonality chart, if I'm not mistaken, but typically the third week in February is about where it stops selling, and then it rallies up into June. So we'll take a look at that next week. I'll be looking for bottoming signals on Natty. Dollar index. It said there was stall out right here. It has. So basically finished flattish. Well, the futures finished flat. This is a little bit skewed, so don't trust that there. But a little bit of a red candle there. Either way, you went up into this red bar. This still looks good. A little bit of backing and filling, some more consolidation will get this going. Dollar index, I like it here. Still have a buy signal on it. And gold finally getting a bid. I came really close today to buying some GDX as a quick swing. I just don't think the upside's that great. I mean, I think it's probably to about 30.50. So yeah, it would require a lot of capital to make it worth it, really, because it's only like like 8% or something like that. But nice little bid there for gold futures. What have we been saying for probably the last month? 1825 to 1830. Low of the day, 1827.7. Got a nice little tail candle off of that. Weekly. Looks like they're defending this. You see the convergence of the moving averages right there. 1, 2, 3, 50, 100, and 20. So it looks like it's got a bounce in it, but I think it will be a lower high. So just be aware of that. Silver also continuing to bounce here, up 23 bips. 23 bips. Anyways, add that to the blooper reel. 21.35 was the low of this green bar. What's the low today? 21.15. I would have liked it if we got to 21. I'm going to tell you right now, I think I wouldn't buy it. Well, I'll tell you right now for sure, I wouldn't buy it at 21 now, because you got a bounce coming, and this should get up to 22.35, 22, maybe even 23. But you got so close to it right now, that 21 handle that I really liked, that I wouldn't trust another hit of it. So again, we talked about this yesterday. Could go through the 200 moving average and get a bid. Looks like it's holding the 50-week moving average, so it's hanging in there for now. There's a lot of support in this area. I think it's a lower high, but it will be a buy again in the not too distant future. So silver, just sit tight with that one. Platinum, again, hanging in there, still just down a little bit, but it's got a chance to really reverse that falling wedge there. 975 to 1,000 would be kind of your target if you want to take that. I don't have a problem with it. Copper, basically a little bit of a retrace today. I think copper is a short here. You have a nice daily chart inside bar, and I do believe the weekly is still okay. It's holding up, but I calculated it out. It's to max move already. And if you close below this green bar, which it should, it's going to bring in some more downside here. But it's holding up for now. I think copper is a sell, though. All right, lastly, let's get over to Bitcoins, because Bitcoin actually was interesting today. Maybe this is, again, we've been talking about Bitcoin being a slight leading indicator lately. Maybe it's telling us we got one more bid in the equity markets, because we got a nice little reversal yesterday with good volume, and it rallied right back up today. Maybe that's Opex stuff. It's just look at where they're keeping it right now. Take a look at the 5 minute here. It went right up to 25,000. Where did it stop? Right, just like Morgan Stanley we looked at, we went right up to $100, picked 2 pennies through it, and then got pushed back down. So it could be some Opex stuff going on there as well. So, certainly a possibility. But yeah, it's holding up okay. I can't say anything terrible about it right now. You did go into that resistance zone. This can still go a little bit higher here. I think I told you guys yesterday, 28,000 would be like a stone cold short if we could get up there in a straight line. I don't know if it does. But it's holding up for now. Ether hanging in there as well, just above the 1,700 handle. Again, big surprise, whole round number, right? So we're seeing crypto get a little bit of a bounce here. How much of it is Opex related, I'm not sure, but it's hanging in there. So again, we'll respect it for the time being. I'm sorry, guys. I didn't have my, sorry. Here we go. Let me see if I can pull it up. Okay, I didn't have my thing set up here for my browser. I'm sorry about that. But you guys can see, you can see Bitcoin there. It had a nice reversal today. Again, 28,000. That's your resistance there. Yeah, apologies for that. Ether again, right at that 1,700 handle, just above it. So those are the levels there. Again, apologies on that one. I restarted my computer last night, so I didn't have the thing set up there. But anyways, back over to the spiders here. Markets close in 5 minutes. We're hovering right around 407, so that looks like a pin right there. Triple Qs, let's see. Oh, right at 301, so they're just keeping it above 300. Again, pinned there. SPX will lose that 20-day moving average. So a little bit of daily chart technical damage, but nothing crazy, right? We made a lower low, but we're holding that level. So it's holding up for now. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all next week.